Hey you guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. I'm always asking you guys for ideas on videos. And the other day I made a video on VTV. That's the Vanguard Value ETF. And after I did, Robert Ryan asked me, what do I think between the difference between VYM and VTV? Now, first of all, I thought that was a good question. I asked him if he thought it would be a good video, and he said yes. So shout out to him. Thank you for. We're going to start with looking at VTV, which we talked about. Now, you guys, if you want to check out that video, it's up there. Really quickly, we're going to just bring it up here on ETF.com. It's the Vanguard Value ETF. This fund's been around since 2004. Now, because it's a value based investment, obviously, these are companies that are established. Not exactly growth companies, but companies that have been around for a long time. And usually more companies that are value, they're going to be more companies that pay dividends. Not necessarily all of them, but more structured that way. Now, in VTV, we've got 340 holdings. So we're just going to quickly look this over. So let's look down here at the sectors. In VTV, your top sectors are financials, healthcare, and industrials, followed by consumer non-cyclicals. Let's take a look at the top 10 holdings. Berkshire Hathaway, JP Morgan Chase, Johnson & Johnson, United Healthcare, Procter & Gamble, Bank of America, Comcast, Pfizer, Exxon, Abbott Laboratories. Now, those top 10 companies make up almost 20.5%. If we slide over and take a look at VYM, now remember VYM is the Vanguard High Dividend Yield ETF. So this is looking at companies that are value companies that pay a higher dividend. Now, this company's only been around since 2006, and it has a total of 413 holdings. So both of these ETFs are going to give you a lot of companies to pick from. But if we scroll down really fast, and you guys, we're just going to look at this really quickly. The top 10 sectors here are financials, consumer non-cyclicals gets moved up, healthcare, technology, and then industrials. So a little bit different in what they use for their sectors. But let's look at the companies here. Number one, JP Morgan Chase, Johnson & Johnson, Home Depot, Procter & Gamble, Bank of America, Comcast, Pfizer, Cisco, Exxon, and Verizon. Now, a lot of the companies are the same as the other, but there's a few that are different. And the top 10 holding here makes up about 23.5%. So why do I look at that? Because remember, these funds, though they're both value-based, because dividend companies are usually more value-based, doesn't necessarily mean they have the same marketing strategy and they're different. But let's compare them and see what happens when we put them both into Portfolio Visualizer. Now, we know that we can only go back to 2006 because the VYM has only been around that long. So let's start with VTV, which is the Vanguard Value ETF. We'll make that 100%. And then we'll put in VYM, which is the High Dividend Yield ETF. Again, 100%. So we're going to start rebalancing annually. We're going to reinvest the dividends. Other than that, we're not adding any money to it. Let's take a look and see what happens. All right. So first of all, we see that the Vanguard Value ETF is the blue and the Vanguard High Dividend ETF is in red. So the difference is not that big, you guys. The Value ETF is at $29,460 and the High Dividend ETF is about $31,623. So we're talking about $2,000 in difference over what would be, a 15-year period. If we look at the CAGRs, the compounded annual growth rate, the VTV is about 7.6 and VYM is about 8.12. Standard deviations are pretty close. The best year, the Value ETF actually took that at 33.1. And the High Dividend about 30.08. But the Value ETF also had the biggest worst year, down about 35.87. The Value ETF, the High Dividend ETF, down about 31.91. So you guys, fairly similar in actually how they have performed. But let's take another look. Let's change this to just the last 10 years. Let's go back to 2011, and we'll leave everything else the same. And I want to see what happens if we bring down the timeline. As I thought, you guys, it's actually a little bit less difference here. You can see that the final balance is 33.5 as opposed to 34.230. So again, a little over $1,000. Now again, the high dividend ETF seems to have taken the cake on this particular time frame, but not by difference. Now the CAGRs, you can see, because we didn't have 2007, 2008, 2009 in there, are much higher. For the value ETF, 11.9. For VYM, the high dividend ETF, about 12.13. And the standard deviation is lower on both as well. And you see our best year was 33.1 to 30.08. And the worst year, again, minus 5.44 as opposed to 5.91 for VYM. You guys, both of these could be a good part of your portfolio. If you feel that growth stocks are overvalued, and many people do at this time, I certainly think you should have a mix of all. But if you wanted to have a portion of your portfolio, I think either of these, full disclosure, I do actually hold VYM as a small portion of my taxable account. It is an option. I'd like to thank Robert Ryan for asking me to compare the two. I think it was a good idea to compare these two to see what happens. In the time frame that we're looking at, it looks like VYM is a little bit better over that time frame. But again, a lot of people believe value investing is a more stable investment because growth companies tend to have a little bit more volatility. I'm not sure I agree with that. I think you're really better off just staying with an S&P 500 ETF and just reinvesting the dividends. What do you guys think? Do you guys hold any of these ETFs? Do you have VTV? Do you have VYM? Or do you just use a standard S&P 500 ETF? Let me know in the comments. Okay, you guys, I hope you got something out of this. If you did, do me a favor, drop that like. It really helps the algorithm. And we'll see you again next week. Thanks a lot.